In here. We're about to get this started right now. Believe Mark Putrino. Uh, can you hear me, Mark?
Yes, I can. Can you hear me?
Yep, absolutely. So in the meantime, Mark, get your charts ready on your screen there. Let's just get started here by asking everybody, where are you tuning in from? Jay, Chan, let us know what part of the world you guys are tuning in. We definitely want to know where you guys are looking at Benzinga from. So let us know in the chat where you're from. Okay, we got people from Tampa, New York City, South Florida, Canada, Belize, Georgia, New Jersey. Okay, Manchester, LA, Ohio. Good stuff. Pretty cool. Pretty cool. So we got people from all over here. Really good to hear that. And all right, guys. So now tell me, what is the one thing that you think is moving the markets? What do you think right now is the talk of the street? Do you think it's inflation? Do you think it's supply chain? What do you think is the biggest theme in the markets today, right now, moving the markets? Supply chain, earnings, Nancy. We always get somebody saying that.
Well, she does have a good track record for trading, so.
Yeah, she definitely trades well. I definitely want to trade with her husband. Third quarter earnings. Okay, so you're looking at that, Mark. You're seeing everything there.
Yeah.
Energy, inflation. Somebody said Tesla. All right. Yeah, it might be really. Okay. All right, Mark. Well, how are you doing? How's your day going there?
It's going pretty well. It's going well. Can't complain. I mean, I could, but no one would listen. So.
Okay. All right. Let's get those charts up, Mark. Let's see. Let's get those charts going.
Yeah, I'm ready. I'm ready to go. Let's see. Share screen. All right. So can you all see that?
Yeah, looks pretty good. Looks good.
Okay, cool. Because for some reason I don't see you anymore, but that's
yeah, I
cool.
took my video off, but you're
good. Okay. All right.
Yeah.
That makes sense. All right. So everyone, thanks for joining in. I know you have an interest in the Benzinga Trading School. My name is Mark, and I am the lead educator, I guess you would call me. I've been called worse, so that's cool. But I guess I'll just get right in because I know you all don't want to waste time. So we think that this trading class is different because there's really two main reasons from my point of view. One is that I have, more experience than most of the other people that are teaching, and, take that for what it's worth. I mean, would I trade being less experienced for being 20 years younger? Well, maybe, but I have a lot of experience. I worked for Mario Gabelli and Steve Cohen, two of the best managers of our day, if not in the history of the industry. Most of the classes, when I was getting this class ready, I just did some searching around, looked at other classes, and here's the thing: it's like anyone who just started trading within the last 10 years, they've never seen a bear market. So there's a lot of people out there that have had really good returns that are teaching, but they've, the rising tide lifts all boats, as they say. They've never really seen a bad market. So I decided to leave the money management industry about 5 years ago because it really changed. When I first started 25 years ago, being in the money management industry was a fun place to be. There was a lot of camaraderie. There was a lot of going out, for dinners and going to games, and because you part of being a trader is having the relationships, is knowing the people that you deal with, because regardless of the firm, at certain firms there are people that sleaze bags that you don't want to trade with, and at other firms there but within the same firm there might be people that are really good that you want to trade with. So anyway, so I was the head of trading at 3 large institutional money managers. I've seen a lot. I oversaw everything from deep value trading to high frequency. But like I said, about 5 years ago, the industry really changed. It's really just more computerized now. The compliance is ridiculous. Like, you can't even go have dinner with someone, unless you like have a full report to your compliance department. So I wanted to get into teaching. My grandmother, God rest her soul, always told me I should be a teacher. Maybe I should have listened to her earlier, but I guess I'm okay with where we're at now. But anyway, so my goal is to teach, and that's why I've come to Benzinga to do the Benzinga Trading School. Now, I will say that in the trading world, or in the trading education world, you're going to see a lot of stuff that is really kind of far out. You're going to see all these people that say, I have a magical system, I never lose, I can triple your money every day. But in reality, that just doesn't work. In the hedge fund world, that's not how trading works. All right. The best traders have big errors. And I don't mean errors like errors, but the best traders make big mistakes. They sell too early. They hold on to the losers for too long. As a matter of fact, Paul Tudor Jones, who is one of the greatest money managers ever, has a quote that I saw somewhere where he says, you're always going to sell stuff that goes to infinity, and you're always going to buy stuff that goes to zero. So obviously he's being a little hyperbolic, but the point is this: there is no perfect system. There is no one way to do it. And if anyone tells you that, you're just wasting your money. What works for one person doesn't work for another person. So what I like to focus on in our training school here is teaching our students how to make their own models and do their own things that work for them. Because we have students that are buy and hold. They just want to buy a stock, or, well, more than one, but they want to buy a couple stocks and not trade and wait 6 months or a year. We have other students that are day traders that are in and out of positions 5, 10, maybe 20 times a day. But the reality is, or the bottom line is, there really is no right answer. You have to do what fits your personality. So in the BZ training school, what I have been trying to do is to teach people how to build a style that might work for them. There are aggressive traders that want to trade options that on stocks that have really been beaten up or really been jacked up by buyers. And there are people that don't want to risk so much money or risk a lot of money. So what I try to do here is to teach you how to figure out what is good for you. I'm not coming into this with this like, oh, we got this great secret system, sign up with us, we're going to teach you how to be a zillionaire. It just doesn't work that way in the real world. We're going to try to teach you how to fit what works for you. So this can apply to any style. A lot of our students are day traders. Day traders basically trade within the day, and generally at the close, they close their positions. They don't want to have overnight risk. We have a lot of cryptocurrency traders. We have a lot of options traders. So what we talk about here is really just fundamentals. What are important levers in the stock market? And in the institutional world, this is what traders think about, all right? This is what we're doing in the real life institutional trading world, where we're trading tens of millions of dollars. We're looking at which price levels are important. We're looking at what trends are going on. In other words, is a market trending higher or lower? And we're looking at the momentum. The momentum is the power that's driving a trend. So just by focusing on these basic fundamentals of levels, trends, momentum, we can put together simple, logical trading methods that work. A lot of amateur investors think that there's a holy grail or some secret formula that works. As someone who has traded literally on the trading desks of two of the greatest money managers in history, Cabelli and Cohen, I can tell you firsthand 100% knowledge that there is no such thing as a holy grail. There is no secret system. These guys don't have some formula they stumbled upon when they were on a vision quest or, visiting a mystical guru in India or something like that. The great money managers realize that there's going to be a lot of errors and you got to deal with them. And they also understand investment psychology and risk management. And that's one of our lessons. Investment psychology basically refers to the fact that people have not evolved in a way that's conducive to trading. Because when you have a profit or when you have a loss, you get afraid. Like you buy a stock and it goes down and you're afraid. I'm afraid I'm going to lose money. So you hold on to it for too long, hoping it's going to come back. The opposite is true if you buy a stock and it goes your way. You're afraid you're going to lose the profit, so you tend to sell too early. So the real holy grail is understanding investment psychology and risk management. And we're going to talk about this, and we talk about this a lot in the classes, and we talk about how this ties into trading systems. Like if you have a set of defined parameters, it will take the guesswork out of it. Like for instance, you could say, well, I'm going to buy XYZ if XYZ has a PE ratio of this, it's oversold to that, and the dividend yield is this or whatever. The point is that the trading systems is you take the guesswork out of it. Now, I would be willing to bet, and I'm sure you all can let Rodrigo know, that a lot of the people that are listening now are listening because they've just guessed and they've lost a lot of money. They don't know how to have a system or a model. So if you guess, just go to the casino. They'll give you a nice dinner, you'll get free drinks. At the end of the night, you're going to lose a lot of money, but you might as well get some dinner and some drinks, right? So we don't want to guess. We want to learn how to have a system or a model, and it doesn't need to be complicated. So I'll skip through that, and I'll skip through this, and we cover cryptocurrencies. The same thing that applies to stocks apply to cryptocurrencies and options. Pretty much any style you have, I think that this class can help you. So I don't want to spend your time with this stuff, but just in case you don't know, well, this isn't that important of a point because you should know that you need a broker to trade stocks. That's just how the law works. But this is an important thing here is never invest more than you can comfortably afford to lose. Because what happens is if you put too many of your eggs in one basket, when you put too much of your money in one position, you're going to be afraid. You're going to be out for dinner with your friends or girlfriend or your boyfriend, and they're going to be like, why aren't you paying attention to me? Blah, 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 blah. And you're going to be like, because I'm like worried about how is this trade going to play out, right? I'm sure you could tell, Rodrigo, you've all been there. I know I've been there. So at least when we're getting started, we want to have real money involved because we want to experience the emotions that either help traders win or lose, right? Paper trading is overrated. I suggest to my students, paper trade for a couple of weeks, a month, get your strategy. But in my 25 years on Wall Street, I've never seen a bad backtest or a bad paper trading strategy. Because when there's no real money involved, it's easy to win. It's easy to profit because you don't have your emotions involved. So what I would recommend to students is, if you're just starting out, invest a little bit of money. It doesn't need to be much, $500, $1,000, but have enough in the market that it will make you think about the emotions that you have to deal with. But also have a little bit enough that if you get blown up, it's not going to ruin your day. And when you're out to dinner with your girlfriend or boyfriend, whatever, like erupt in some scene Not saying this ever happened to me, but the point is, if you don't have real money on the line, you're never going to learn what makes a good trader a good trader. But it doesn't need to be so much that you're going to, don't bet the farm, but just don't get carried away with paper trading. I guess that's what I'm trying to say. There's a lot of paper traders that are great, but when they go to really put money to work, things change. So this is our Benzinga School trading philosophy. It doesn't need to be complicated. We're not going to look at any really super sophisticated things. We're not going to look at like Elliott waves. We're not going to look at Gann theory. Maybe you've made money off of that, and that's great. In my opinion, I think that stuff is just science fiction. And I tell people, like, you want to read science fiction, read Ray Bradbury. I know he's a great science fiction writer. But in the institutional trading world and in the hedge fund world that I've been in, no one talks about, oh, here's Gann theory, or look at this Elliott wave. What do people talk about? What do people talk about in the institutional trading world? All right, well, what level is important? The thing is 20 an important level, or is 18 an important level? Where are the buyers? Where are the sellers? Trends. Is the stock moving up or down? Stocks are always doing one of three things. They're either going up, going down, or staying the same. Momentum is the power that's driving these trends. And this right here is an important thing. Just from getting your mind around this one statement, we can infer something, right? Stocks that are oversold, meaning that the momentum has really beaten them down, they're trading at an extreme below what would be their typical range, that get to a support level, they tend to rebound. Stocks that are trending higher, that become overbought, in other words, are trading at an extreme above what would be their typical range, they tend to sell off. So we need to understand what levels are important and what trends are important. Technical analysis has a bad reputation, but unfortunately, it is well deserved. I've been following charts since I worked at SAC, which was, I left there 21 years ago, right? But when I was there, that's when I really got into charts, and I went and I got my CMT to learn about the technicals and the market. But unfortunately, technical analysis has a bad reputation, but it deserves it, because I look at television or on the financial media, and you see these people are out there, and a lot of them are just regurgitating what they've heard. They're not really thinking for themselves. Oh, I read in a book, if something's rallying and the volume is increasing, well, that's a confirmation. All right, well, if the volume is increasing, aren't people selling it too? So those people are losing, So yeah, some people are making money, but some people are losing. So it's unfortunate, because there is a lot of validity to what is technical analysis, at least in my mind. I personally call it market equilibrium analysis, because that's what we do when we're looking at charts. We are looking to find something that is out of equilibrium. If something is in equilibrium, it doesn't move. Supply and demand are equal. It's $20 and supply and demand are equal. It'll just trade at $20 forever. That doesn't interest us as a trader. We want to find something that is out of equilibrium. It's either oversold or overbought, because we're looking for a reversion or a new move. And that's, as traders, that's what we look for. And that's one of the things we look for in this class. Now, I'm going to go a little slow here, because I don't want you all to miss this. But I believe this is a good analogy. And people make fun of me, blah, 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 blah. But that's enough. We talk about this stuff in class. So far, we have a really good class. We've been going, I think, for about 3 weeks now, and we have a lot of people that are really contributing, and there's a lot of interaction and exchange of ideas. So I'm actually really, frankly, I'm surprised at how fast a lot of the students have come along. We have students that have tried tens, if not dozens, of other classes. all they did was lose money. They never learned anything. They've come here, and so far I'm pretty happy with the results. I have students that are asking the right questions. We've had students that have made some money on some trades, which I can show you. But this is what we do as traders. Okay, think of the medieval market. So just picture, this medieval market where farmers and merchants come from all around to distribute their goods. All right. So now let's pretend there's only one way in and out of town. A shrewd merchant could hire someone or do it themselves to go watch the supply train that come, or supply wagons that come in and out of town. So now suppose this merchant sees, oh gee, there's not that many apple carts now. Usually there's 10 carts of apples. Today there's only 2 carts of apples. So what does that shrewd merchant infer? That shrewd merchant can infer, oh gee, there's going to be a shortage of apples. Apple buyers are going to have to pay a higher price. What does that merchant do? They go into town, they quietly move around, they buy up all the apples. And when the buyers come into the market and they want to buy apples, they realize that they have to pay higher prices because there are no apples offered around current prices. So now this shrewd merchant who bought all the apples can turn around and sell them at a higher price. So this particular merchant doesn't need to have a knowledge of how apples are grown, doesn't need to know all of the thousands of varieties of apples there are. They just need to recognize that there was going to be a dislocation of supply and demand, and that allowed them to profit. And that's what we're looking for as traders. That being said, this class is not purely technical analysis. We cover a lot of things like, what did we cover? Well, last week we talked about the Tilray earnings because I thought that Tilray, I explained to the students what to look at when you're looking at an earnings presentation. In the example of Tilray, they're talking all about like, we're growing this, we're growing that, blah, 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 but they don't talk about, oh, gee, we're making money. So one of the things we need to look at is when we're analyzing an earnings statement is not just what they say, but what they don't say. So the class is focused on traditional technical analysis, which I call market equilibrium analysis, but we do cover different things. And as someone who has a lot of experience like myself, I know a lot about what goes on at Wall Street. So, if you see something on the news you don't understand, you can just ask me. Hopefully I can explain it. Like we've had a couple of students over the last few days talk about like, what is tapering? They think it's just cutting interest rates, but we talk about how the Fed is not buying in the open market anymore. So we need to understand when we're looking at a chart, we're looking at an illustration of the supply and demand dynamics. Like I talked about with the medieval market. If you look at a chart and you're looking for like secret patterns, or you think you see a head and shoulders, but you don't really know what it means, you're not going to be successful. When we look at these patterns, we look at them in the context of what do they show about supply and demand. And like we just saw with the medieval merchant cornering the apple market, if you understand the supply and demand dynamics, you can profit. So this is what I want you to learn in this course, and hopefully you'll sign up. And I think Rodrigo will tell you, I think we have like I don't know if you can sign up for a money back guarantee within a week or two, but I'm confident you'll like it. And if you don't, please let us know. We could, maybe we're missing something that you guys could let us know. So this is what I want you to understand when you're finished with this course. And this is another thing too, which I'm sure Rodrigo could explain. We have 8 classes, but it's not just like you take the 8 classes and it's over. In each class, in the morning, I talk about market principles. We have like class 2 is levels. Class 3 is trends. Class 4 is momentum. Class 5 is chart patterns. Class 6 is investment psychology. Class 7 is analyzing the markets. Class 8, which we had today, was building trading models. So during the 8 classes, we cover the fundamentals, but then we apply them to the real-time market. And then the classes recycle and they start again. It's not like you take your 8 classes and it's over. I want my students to be with me for a while because we're going to have to go through a couple different market cycles. You know, a lot can change in 8 days. You know, if you're with us for 6 months or for a year, you're going to see that different things apply at different times. So we're going to understand why most investors and traders fail. I'll tell you right off the bat, it's because they guess. They don't have plans. We're going to talk about important resistance and support levels. We're going to talk about trends. We're going to be able to identify classic patterns.
All right, good stuff there, Mark. So let's what are you guys looking at in the trading school right now? Like as far as like the market, what is on your radar with the students there?
All right, let me go over to my charts and I'll bring up a couple ideas that we just talked about in the class. All right, well, this idea is probably over, but it's a good example of what we look at. So a lot of the students were able to make some money off of Verizon. And we have stock traders, we have options traders. And you can go back, like Rodrigo, right? All these classes are recorded because a lot of people
Yeah, yeah. We'll go over all the details later on the trading school.
But a lot of people are probably out there saying like, oh yeah, you know, this guy's saying he's so great, blah, 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 blah. Why should I?
Oh yeah. They're recorded. They're all recorded there for anybody to look at. Correct.
Yeah, and I mean, I expect you to be skeptical. I want skeptical students. I want people like I'm here to teach you how to think. I'm not here to tell you what to do. Going back a long time ago, when I was in business school, I took a class that was taught by a guy by the name of Larry Zicklin, who's probably retired now if he hasn't passed on. He was a great money manager at a firm called Neuberger and Berman. And when I was at NYU, he taught the ethics class. And frankly, you know, I went to business school for 2 years. And it's like, there are classes I probably don't even remember. But one of the things I liked about Larry's class was it was an ethics class, and he would come in and he would literally take the Wall Street Journal, because back then people actually had newspapers, and he would throw it on the table and say, all right, let's look at this article here. It was an ethics class, right? So, all right, well, what could be ethical situations with this thing here? It's like, all right, well, a company A just acquired company B, and it would be this brainstorming session. Well, if someone had inside information, is it wrong for them to trade on it? And everyone would be like, well, yeah. Well, what if they were, you know, their children were starving to death? And this was the only way for them to make money. So the whole class was brainstorming and self-teaching and an exchange of ideas. So that's what I want this class to be, because what I see with my eye, you might not see. You might see something that I don't see. What works for one person doesn't work for another person. If you made Tom Brady a linebacker, he probably would not be that good. So this is something that a bunch of the students have made money on this past week. And this is where the real-time application comes in, because we're looking at real markets, right? Everyone is a genius if all we have is hindsight in 2020, like in a trading book. But let me just show you my process for why I recommended to our students they should buy Verizon. So Verizon, frankly, absolutely collapsed, all right? On October 7th, it was at 54. On October 12th, it was 51-ish, say 51 and a half. This is not a meme stock. This is not a penny stock. This is not some new cryptocurrency. This is a huge company with huge volumes, millions of shares trade every day, you know, big market cap. This collapse happened And me and the students, I don't even remember where we first saw it. We were probably looking at a list of oversold stocks. That's probably where it came up. But anyway, this is what we look for as traders. We have a market dislocation. And in my 25 years on Wall Street, I don't recall ever seeing a move like this in a big stock that's well known and has a lot of liquidity with no news. So it would have been one thing if they came out and said, all right, we were going to miss our earnings, the CEO is retiring, or our CFO is swindling, is cooking the books and swindling money. But we have this huge sell-off. And for what? We don't know. For no reason. We check the news sources, we talk to different people. My guess is some big fund, a big hedge fund, or a big institutional money manager is going out of business. So they needed to bail out of all their positions. I listened to the conference call, they didn't mention it. But anyway, so who cares? All right. We don't care what happened. Well, we kind of do, but what we really want to see is that we have this huge dislocation. We have a huge move for apparently no reason. So what do we expect? Well, there's a good chance it's going to revert or go back to where it should be. Once this dislocation, like if it is a fund just bailing out, once whatever is going on is over, we think it's going to go back to where it was. So I think we could probably picked it up right here. And like Rodrigo said, it's on the videos. Like we do stuff, like it's different when you do stuff in real time as opposed to just backtrack. We're like a jazz band. We just like jam, and once we're done, we move on to the next day. We don't worry about what happened yesterday. So we were following this. Then when we got to this day, we saw this turnaround. Stock went all the way down to 50.86, came back, closed a little higher. So that's like when I recommended to the students this would be a good time to buy, because we're going to have a reversion. Now, one of our students said, and again, I want to talk about the class participation because that's a big part of it. One of the students who bought the options, I said, well, where are you going to put your target price? Where are you going to sell it? And he said, I'm going to sell it at 55, which would be up here. Now, we reviewed this for a while and we said, well, why is 55 not an optimal place to have your sell order? The reason is we have this important level around 54. All right. So we thought there would be resistance at 54, and there was. Today's high was 53.93. Right. So, I mean, I'm sorry that I can only get it within 7 cents, but fundamental analysts can't do that. As traders, we can get stuff really close. So now, why would I think there was going to be resistance around 54? And before I digress, as a class, we had a discussion that, well, we shouldn't have our sell order at 55 or 54. There's a chance the stock runs into resistance at 54 and doesn't go any higher. So we, as a class all together, and you guys can hear all this, I'm not, lying or self-promoting or anything like that. We discussed that, well, we should have our sell target a little bit below the resistance. Like 55 is just a number that was pulled out of the air, I presume. There's not a logical reason for it. But having it just below 54, there is a logical reason. Why? Because it was support. 54 was support back here. 54 was support here. Why? Now you're probably asking, at least I hope you are, why would a level that was support become resistance? Like, what the hell is Mark talking about? Why does he say there's probably going to be resistance at this 54 level? The reason why, class or potential class, is because it was a support level. In the markets, support levels can turn into resistance levels. It happens all the time. You can see it on a lot of charts. Why does this happen? Well, it happens because of buyer's remorse. A lot of the people that bought their stock here at 54 regret their decision when the stock went lower. They're underwater. They're losing money. A lot of these remorseful buyers, okay, they bought the stock, it went lower, now they regret buying it. They're remorseful buyers, tell themselves, I made a mistake. I want out. This was a dumb decision. I hate this stock. I'm going to get out. But they don't want to take a loss. So what happens? And I would be willing to bet a lot of the people listening right now can completely identify with this. They want to get out, but they don't want to take a loss. So they put their sell order at the same level that they had their buy order at. In this case, it's 54. If there are enough of these sell orders, it converts the level into resistance. So that's why we talked about getting out before it got to 54. Now, look, we're not perfect. I mean, it could get up here and it could blast off and go even higher. But what I want to teach my students is if we're buying, if we're selling, we need to have a reason for it. You can't, if you guess, you're going to lose. If it's like, oh, I think it got to a nice level, I'm going to buy, I think I'm going to sell, you're going to lose. We had a valid reason for entering this trade. The reason was the stock was down huge on no news. Our trigger, or a reason to actually place the buy order, was on this day back here, October 13th, when it looked like the buyers had taken control. So we could call that our trigger.
Hey, Mark, really quick here. Can you hear me?
Yeah, I can totally hear you.
Yeah, we're getting a lot of questions here about your trading school. So I'm just going to do a quick, I'm just going to show them really quick the portal that we have here for
cool.
the education. Yeah, 1 second. Yeah, these questions, they just happen to build up now. Can you see that, Mark, on my screen?
Yes, I can.
Okay, basic. All right, guys. So this is the trading school. This is what Mark is referring to. This is where we have all the classes. As you can see, this is the homepage. So you can see we have the class for October 21st, investment strategy and trading systems, the Q&A session that we have. We have a lesson recap. You're meeting about 3 times a day. And we have all the prior recordings there, investment psychology, market principles, analysis, and sentiment. All the Q&As are recorded there as well. So if you happen to be busy with a 9 to 5 or anything else, you know, you might live somewhere else, you always have the classes there recorded for you. And the live class button here is where you go for the live class session, where you'll have a chat here. And Mark is basically teaching live Monday to Friday. And in the video library, you'll be able to find everything, all of the actual recordings, all the chapters by day, everything is marked by session. So you have a good way to keep tabs on that. And we also have our chat rooms here where Mark is whipping out trades regularly with charts, you know, with levels and all that stuff, class materials, office hours.
Why don't you, try to interrupt, but if you can go into that trading thing and scroll back a little, you can see some of the trading ideas.
Yeah, there's one here that
we got to separate that into its own chat because you can see like
which was the one that which was the trade? Do you know which was the symbol?
If you go look for Verizon, all right, whatever, just scroll back. It doesn't matter. I just want the students to see that we have a good community. We have some pretty seasoned traders in there. Okay, like, yeah, all right. So there's something we talked about. That's a pretty interesting looking chart. But if you want, I can talk about.
What is this chart, Mark?
This chart is something that we just discovered as a class, probably 2 or 3 days ago. So I was going through various indicators, and frankly, most of them really aren't that good. We focus on RSI, we focus on Bollinger Bands, which are good. But I was just doing a little bit of exploration, and I found this chart here, this system here, which uses what's called a Fisher index or oscillator, which is kind of interesting, right? I stumbled across this by accident. Mark Fisher is the guy who I've met. He's probably retired by now. I met him 20 years ago. He was a great pit trader. He was in the pit of the futures market in Chicago, I believe, and he was a great trader. So anyway, so I'm playing around with TradingView, which is in Benzinga Pro, and I come across this indicator called the Fisher Transform, I believe. And I've never used it before. I assumed it was something Mark Fisher created. So I started looking at it on charts, and a lot of the students started looking at it too. And it turns out that it's a pretty accurate indicator. So right here, what you're looking at is a 4-day chart of Goldman Sachs, something me and some of the day traders kind of put together. And this is one of the things about the class that I like. I'm just not telling you what to do. We're having interaction with the students. So anyway, for whatever reason it is, this particular indicator has given great buy and sell signals over the last 4 days. And you can see the B's are the buys, the S's are the sells. I mean, so if you're a day trader, this thing could have really helped you out. And again, there's no secret system out there or anything like that. But just by playing around with various indicators, oscillators, you can find stuff that is profitable. It doesn't need to be overly complicated. So a lot of the students now have been applying this Fisher indicator or oscillator or whatever it is to their stocks. And so far, we've had some good results. Nothing works forever. And I assume if enough people start looking at this, it eventually will become obsolete. But this is something that the students and I discovered together. We were just brainstorming. It's not like I knew about this thing a month ago and said, all right, well, on Tuesday the 19th, I'm going to bust it out like it's this new secret. No, like the students and I went through this together. We found something that looks good. So a lot of students are bringing it into their toolbox. So part of the class is teaching you how to use all these various indicators, because you can look on your indicator your indicator options, and there might be hundreds of them, but they're all various ways of measuring the same thing. So I'm just bringing this up to as a point to show that I like the interactiveness of the class. I'm not just here to lecture, right? It's the whole feed a fish or teach a man to fish. We want to teach you how to fish, right, Rodrigo?
Yeah, and I also want to point out that the trading school also includes Benzinga Pro. As you can see here where I'm hovering the mouse, all you do is click that button and it'll take you to Benzinga Pro, where you'll have all the access there. So basically, we're giving students the tools they need to be able to do their research and actually know what they're researching, right? And then an instructor that can hold their hand and guide them as the market changes, right, every day, how to use these tools. And what is this chart that you have here on the trading room, AMN Healthcare?
Yeah, a couple of students have been asking about that. I don't know what drove it down. It looks like it made a reversion. Rodrigo, can you put me back on here, or do I have to do something?
Yeah, you can go ahead and take on the screen. Just want to show them the actual school.
Okay. So I should go back to share screen. I don't want to kick you off.
Yeah, just share the screen, take over.
Okay. All right. Does everyone see that?
Yep. Okay, wait. Yeah, Michael, I'm gonna be putting the link there. I wasn't looking at the chat on the Zoom, but I'll be posting the link on how you guys can join. But let's go ahead and continue here with the education, Mark.
All right. So some of my students today asked about this stock, AMN, which Rodrigo saw in the chat. Now, I don't know anything about this company, so I'm not making any kind of fundamental decision or talking about the company, but just purely as a trader. Okay, just going back to our medieval market example, just as a trader, you can see we have like an idea here, right? We have a stock that is, and I'm just going to scroll down and put in our relative strength index indicator. We have a stock that had a massive sell-off, right? I mean, you can see that. This thing lost over 20% in a matter of days. But no one really knows why. It's like the same thing with the Verizon, right? I mean, I guess there was some news. They had a new CFO. Generally, new CFOs it's a good thing, but that's neither here nor there. What we see is a stock that's down huge. It looks like it finally found a bottom around this 94 level, which we can see was resistance over here. Actually, let's put this at 93. Now, remember, class, why would a resistance level become a support level? Well, we talked about buyer's remorse before, and now we're going to talk about seller's remorse. People that sold it here thought they were gurus when the stock went lower. But then the stock goes higher and they say, oh, I made a mistake. I want to buy it back. But I'm not going to pay more than I sold it for. So these investors, these remorseful sellers, they placed their buy orders at the same price they sold it at. If there are enough of those buy orders, it forms support. And that's what happened here in June. That's what happened here in July. And after this massive sell-off that started on the 13th and went through the 15th, so I guess that's Wednesday, Thursday, and Friday, where did we find support? Okay, now this is a real fundamental lesson, or one of the fundamentals we cover. One of the main things I talk about. Certain price levels are more important than others. You know, you don't need to sign up for a class, but if you just write that down, you will have an edge over other traders just by that simple little thing there. Certain price levels are more important than others. For some reason, the 93 level in AMN healthcare is important. It was resistance here. It was support here. Lo and behold, after this massive sell-off, which we don't even know why it happened, it found support around 93, right? The low trade on this day was 93.34. And I don't want you all to get too caught up in playing things to the penny, because you'll never be perfect. But it looks like we got a little bit of reversal here, right? When the red lines, a red line is the stock closed lower that day. Each one of these rectangles is a day. So let's look at this as, if you're, a football fan, or, like in the military, let's look at this, right? So what does this red line mean? On the red days, the stocks open. A red day is a stock that the close is lower than the open. So the top of the rectangle is where it opened. The bottom is where it closed. Top of the rectangle is where it opened. The bottom was where it closed. So for these days, the bears were just completely in charge. They just crushed the bulls. But then we get down to this level that was previously support. And guess what happens? The buyers come out, or the bulls come out. They put an end to the sell-off, and now it looks like the tide might be turning. A lot of people get too caught up with patterns if they're technical analysts, like thinking like this is this pattern, this is that pattern. You don't need to remember the name of the pattern. This is probably some kind of candlestick pattern. Who knows what. But as a trader looking at this, right, this is where it closed. We've had some choppy trading. And now the stock is higher than where it closed a few days ago. This could show that the turn has happened. The bulls might be taking control back from the bears. So we don't know anything about this company. We don't necessarily need to, as long as it's a legitimate company with real volume and real people, and not just some, shell fraud company. But that's one of the great things about being a technical trader, is we're looking for market dislocations. We don't really need to worry about why. Well, actually, that's not true. Let me take that back. If there's a reason for a big move down, like for instance, say, all right, the CFO just got indicted on fraud, well, that's a reason. But when we see a big move down like this and there's no reason, and it finds a bottom at what was an important level, and it starts to turn, this is the type of thing that we're going to throw on our watch list. As a Benzinga Trading School student, this is something that we watch, right? If stocks are in equilibrium, they're not going to move. We can just move on and we can ignore them. When I look at this, clearly this was a shock to the equilibrium, and now we might be getting back in equilibrium. You know, maybe this is the same thing as like Verizon. Someone was bailing out. So what we would do here is we would say, all right, well, you know, this could be a buy. And I would even be comfortable with telling you students, or you potential students, if you want like a actual trading idea, I would be comfortably with telling you that this is a buy because it's made the turn. I don't want you to go out and, you know, take a mortgage and, you know, remortgage your home to buy it, but put a little bit of money into it, you know, to see if, you know, to see how you make out. But I would be comfortable with recommending this as a buy. This is the type of thing that we look for in Benzinga School. So we had a huge sell-off. There's no apparent reason. We found support. It looks like it's turning around. Let's go back to Verizon, because this is a similar situation.
Hey, Mark, whenever you're done with that, let's move over here to a couple questions.
All
that
right.
we got.
You go, dude. When I do this stuff, I get like so into it, I forget what's going on. So yeah,
No, I know.
Yeah, throw some questions at me.
Okay, all right. So last time we met here, Mark, we talked about a couple market themes, and it looks like, well, I mean, things haven't changed. We talked about the CPI numbers, the consumer price index, those came up higher. We were talking about inflation, and it looks like that seems to be a bigger problem, along with the supply demand constraints. I think you saw today what happened with Apple. They made a couple changes, and that ended up bringing down Snapchat. I don't know if you want to pull it up on your chart. Snap.
Apple or Snap?
Snap, yeah. So Apple announced some changes, and it brought down a lot of tech companies like Snapchat on earnings today. It's down like 20-30%.
Oh yeah, that's a
And
huge move lower.
yeah, and so what, you know, with all these changes coming up, it seems like, you know, everybody thought tech was the leader, but with Apple's change today and concerns about inflation and supply, demand, and chip shortage, where do you see tech coming along in this market?
All right, well, this is, you know, I'm glad you brought that up, because this is another thing we do in our classes is we look at the actual markets. Different things lead the markets at different times. So the fact that tech, I'm going to bring up the XLK. All right, now this is the technology spider. It follows the technology industry. So it doesn't look that bad, but, you know, like Rodrigo said, we got Apple, you know, we got the Snapchat. Apple looks like it's okay. Snap looks like it's making a big move lower, like a real big move lower. Like if it opened now, it'd be down about $12.
Yeah, it was after hours, so that's probably maybe why.
So here's the thing, though. It's like in the market, there's always opportunities. And what we could be seeing, I'm going to bring up the healthcare sector, which is XLV. Now, my personal opinion is that the bull market we've been in for years is getting close to an end. All right. I'm not saying go out and sell everything tomorrow. What I'm saying is, you know, maybe we're in the bottom of the 8th or the top of the 9th. So what happens when we get towards the end of these markets, or what can be a good sign? So a lot of times when a market gets towards the top, there's what we call a flight to safety. Money flows out of the sexy, risky sectors. Well, I don't know if risk is a good word. The more volatile sectors, but people that think that, all right, well, we're kind of coming to an end here. This market's getting mature. What they do is they have a flight to safety. So they start selling the stuff that was more risky or perceived to be more risky, and they start putting in their money into stuff that's perceived as being more conservative or safe. Now, what I have here is XLV, which is the ETF that tracks the healthcare sector. Well, let's think about healthcare. Regardless of how bad the market is, or if the economy crashes, people are still going to be paying for healthcare. So healthcare is considered a safe sector. So I'm glad Rodrigo brought this up, because this is something that definitely has my interest. Again, this is the XLV, which is the healthcare sector. This follows, Johnson and Johnson, the companies that make money by selling stuff to hospitals. So you see this money coming in here. I mean, this is a big move, a big spike higher for this sector. Generally, this sector is kind of slowly moves higher, kind of crawls higher. But we see this huge money coming in here. This thing is gapping up. Let's look back over healthcare. Let's just say let's just go for 1 year, okay? Now, if you look at this healthcare sector, and you don't need to be a market guru, but have you ever, in the past year, has there any been action like this that has gapped up? I'll just clean up this a little bit so you don't have to see it. Look at this action, just ripping higher. This is like a biotech stock, but this is the healthcare sector. I mean, we had some gaps up here, but this is, who even remembers what this was? It was November of 2020. I mean, time goes fast. We had some big gap ups here, but I would say the only thing that is similar over the past year or two is whatever was going on in November of 2020, so last year. But anyway, my point is, students or potential students, that sometimes a big move up in one sector can tell you or give you some insight into what's going to happen in the rest of the market. So is this a flight to safety? It could be. This could be a sign that the bull market is getting towards an end. Now let's look back here. This is something I wrote about. This is a good example. Now look back here in September of 2020. See how healthcare just really gapped up right here? Right, so this is September 3rd of 2020. We had this huge move higher. Flight to safety? Yes. Now I'm going to bring up the S&P 500 or SPY at the same time period. So this is the same day that healthcare gapped up. Look at SPY. This was like a full-blown nasty sell-off. We probably lost over 10% here. So that money moving into XLV was bearish for the broader markets. It was a flight to safety. So that could be what we're seeing now. I'm not saying, sell the farm or anything like that, or bet the farm or whatever that expression is. Sometimes you can also see this flight to safety in the consumer staples sector. We don't really seem to be seeing it here. But if we go back to September of 2020, right? So look at this, right here. So the massive move higher in consumer staples, almost like panic buying in consumer staples and like panic buying in healthcare, was a flight to safety. And flight to safeties can show us that we're getting close to the top. All right, so I don't want to get too carried away. Let me know if you guys have any more questions. I have a tendency to go on tangents, you might have noticed.
Well, another question here, Mark, is I think you already covered, well, thing is you cover a lot of these things on the trading school, like tapering, the debt ceiling, wage inflation. Now, can you give everyone an update on your famous oil trade when you call the bottom at 60? Where are we now with oil?
All right, well, let's not, I mean, I made a good call on oil. I don't want to get ahead of ourselves because, you know, pride comes before the fall. But we had a pretty logical setup on oil, which Rodrigo is referring to, and that was down here. And I will tell you why we made that call. And I believe, Rodrigo, that is on a, I think it's on a boot camp. It's before we got the lessons started. But I'm going to put in my indicators. I'm going to go to the relative strength index, which is a simple momentum indicator. Momentum basically measures how far something has moved in a given time period. And if it's gone too far or below its what would be its normal trading range, that would be boy, all right. Let me start this again. Sorry, everyone. So momentum is how far a stock or a commodity, in this case, has moved in a particular period of time. If it gets overdone to the bottom or overdone to the top, traders are going to be attracted to that market because they're going to be expecting a reversion. So on the bottom here, I'm going to bring up my relative strength index. Let me go over to this little wheel thing here, just to make this look a little bit easier to read. I don't like the defaults they give with this purple, but you know, it's not changing anything. It's just whatever fits your eye better is good. I don't like these dashes. So I'm going to put in a line on the top, and I'm going to put in a line on the bottom, and then I'm going to tell you what this is. So the relative strength index measures how far a stock or a market has moved in a particular period of time. If you look over here, you can see this 14 number. This particular indicator measures how far something has moved in 14 days. This is the default setting. When you use these indicators, you can mess with the defaults and find better settings that work. But sometimes the default settings are good enough in themselves, and that's why whoever developed them uses them as default. But anyway, so let me go back to what Rodrigo was talking about. So back whenever it was at the end of August, and there was, I believe it was a boot camp. So we were talking about, well, gee, it looks like oil has found the bottom. Why? No incredibly complicated reason. We don't have any super sophisticated secret pattern that told us that. But let's look at oil. Okay, so in May, there was support around 61.50, right? Support is there's enough buyers that they put a floor under it. The thing rallies off of that. So when we got into August, we got the sell-off, and we started getting close to this level that was previously support, around 61.50. At the same time, we have an oversold reading down on the RSI. And this RSI is just added in. I haven't messed with any indicators. It's just or any parameters or settings. It's just the RSI using the default settings. So what do we have here? All right. And, you know, I don't want you guys or you students to think like, oh, this is too easy. You know, sometimes easy is better. We don't want to get overly complicated. But what happened? Oil got down to a level that had been support at the same time as it was oversold. Oversold markets that reach support tend to rally or rebound. So for that reason and none other, you know, we weren't talking about infrastructure or commodities or oil demand. All we saw was we got into a level that was support and we're oversold. That simple reason, real simple, oversold at support, gave us an idea that it was time to buy. And look, oil has gone pretty much straight up since then. So we made a really good call on oil here. And I know you may not trade futures, but if you trade oil stocks, like if we make a commodity call here, you could just trade the stocks. Like look at British Petroleum, it rallied at the same time. So like if you think oil is going to rally, you don't need to buy oil futures. You could buy an oil company stock, Mobil, XOM. We could see this is where all right, so this is ExxonMobil. Like this is where oil bottomed, right? Like right here. So if you don't trade oil futures, you don't need to. You could look at oil stocks. So ExxonMobil rallied since then. So that was our energy play. And frankly, I still think we should be long oil stocks. I think oil gets to 100 easily. I mean, geez, at this rate, it could be within, it could be by the year end. I hope you all don't have natural gas to heat your houses because natural gas is like tripled. All right, so now here we go back to oil. We can see the bottom. We can see we had a little bit of a sell today, but we're still in a solid uptrend. So what Rodrigo is showing students or potential students is we can find potential trading ideas by looking at broad market themes. Clearly now the theme is inflation, and inflation is bad for most companies and for the economy as a whole, but certain companies benefit from inflation. For example, oil companies. If the price of oil goes higher, the companies that own lots of oil will become more valuable, and that will make their stocks go higher. So just because we talk about economies or commodities, we're also going to talk about ways that regular stock investors can get involved.
Yeah, absolutely, Mark. And really quick, just because we're getting a lot of questions here about the trading school, guys. So the trading school, basically, it's a worldwide trading education platform that we have. Mark is there. He's the instructor. He's basically teaching all day. A lot of people here that are in the Zoom call, they already know that because they're in class with Mark. So the classes are the classes are recorded. So in case you cannot attend them, they're going to be available so that you can review them. That way you can actually start trading with a community, trading with like-minded individuals that really are not just only trying to learn, but they're trying to make money while they learn, instead of the other way around, like most people start, is that they start and they try to wing it or figure it out. When as they're doing it, they end up blowing up their accounts, and it's not a good feeling. So that's why we don't want retail traders to continue to doing the same mistake, because at that point, you really should just send a check to Goldman Sachs, because that's really who is profiting from all these non-informed financial decisions that you're making. And Mark is the instructor there, so you're going to have office hours with him if you need it. And all of the classes have Q&A, open market discussion, and pretty much taking your career to the next level, taking your trading career to the next level, instead of just buying whatever's trending or buying whatever CNBC is talking about. You actually, to make max profits, you need to be able to look into the future. And as we did with this oil play months ago, right before we started the trading school, this was a perfect example of the things that we are doing there. So as you know, when you're looking at a commodity, yes, you can even dissect that further and find individual stocks that will perform accordingly. And BP is a huge, great company to own. Even if they're in the oil, they're also in the green energy sector. They're not going to go away. So being able to actually do this together as a community, trade together, learn together, go through the courses and the education, it makes a huge difference, because otherwise your tuition is going to be blowing up your account or something like that, instead of something controllable and manageable. But anybody that has questions about the school, we're going to post the information here in the chat. But this is what we're doing every day, right? We do this every day, and it's something pretty normal. So what you're seeing Mark do is pretty standard. So just to hear from you, Mark, What do you think the students here, people that haven't joined yet, because a lot of people here are students, what are some things that you've seen students be able to overcome as they start with the trading school? Some progress that you've seen there?
Well, the biggest thing that I'm hearing, Rodrigo, is that students are coming to the class because they want to learn, and they want to learn probably because they've made mistakes. If everyone was just making tons of money, they would be teaching a class, right? The biggest thing that I'm hearing is that most of our students have lost money because they've guessed. They don't have a plan. They don't know what to do. They guess when to buy, they guess when to sell. And if you do that, maybe you'll get lucky one or two times, but eventually fate's going to, catch up with you and you're going to lose money. So I think the biggest thing that I'm getting back from the students that they like is we're teaching them how to not guess, to have an actual plan. The second thing I'm getting back from the students that I think they like the most is that I'm teaching them how to actually use these models and these indicators and set them up for what works for them and not what works for me. Like if a student has a personality that like a longer term outlook, they might be looking at charts in a weekly perspective. If a student has an aggressive personality and they want to be a day trader, they're going to be looking at things within, a 1 day or a 5 day time frame. So amongst the students and the retail traders that are just getting started, there seems to be a lot of questions about what's the right time frame, what's the right strategy. The answer is there is no right time frame. There is no right strategy. It depends on the person. You have to have a system that works on your personality. If you're really conservative and you're afraid of losing money, that's cool. You have a conservative strategy. You have tight stop losses. Yeah, you invest in stocks with low volatility. If you're someone who likes, being aggressive, and I don't want to say take a chance, because we never take a chance in our class. Everything we do should be based on some kind of an educated process. Like if I asked a student, like today we had a student, I forget, I don't even remember who it was, but they said they made money in something. And I said, well, why? Why did you sell it? And they're like, well, I just thought it was time to sell. All right, well, great. Well, they made money and that's cool. But I don't want guessing. We need to have a reason to do something. So I think ask me again in a month and I might have a different answer. But so far, the feedback I've gotten is that students don't understand that they need to have a system that works for them, and there is no magical time frame. It just matters,
Okay.
what fits your personality.
So I'm reading here one of the comments from the chat, and I get this all the time. I get these calls of people that went in really hard with $300,000, $400,000, $500,000. They're really down, and they really don't know where to go. So let me just read the comment here really quick. Do you teach proper risk management? I'm down everything, almost $580,000 or more. What is your response to that, Mark?
All right, my response to the person that lost 580,000 grand, that's a hell of a lot of money. All right, unless you're worth $100 million. I think what I hear is that you are being emotional right now. Okay. And who wouldn't be? You lose that kind of money, you're going to be emotional. The worst thing you can do now is try to find a new idea that's going to make it all up to you. My advice to you would be step away from the market for the time being. Get out of the market, get your head clear, spend a couple of weeks in the class, learn about risk management, learn about discipline and investor psychology. But, when someone comes to me and they're like, man, I lost a huge amount of money. Like, I'm sorry. I can't say, well, go invest in XYZ and you're going to make it all. What I'm saying to you is it's okay to be on the sidelines. Get out of the market. Just be in cash for now. Get your head clear. Stop worrying about it. Let's take some time and let's come up with a strategy that works for you. Because
For
if you
his
go
style.
into the markets
Yeah.
afraid, you're just going to lose. I mean, same thing if you go into the market. I'm not trying to rub salt in the wound here, but let's turn it around. Let's say you made $580,000. Well, it could be the exact opposite. You might go into the market with so much arrogance, like, oh, I'm the greatest trader ever, that you could blow it all. But to that student that asked that, or that potential student, I hear you. We have students that have a lot of money, that have lost a lot of money. My advice is just get out of the market for now. Just take some time off. Tomorrow's the weekend. Just chill, and hopefully that's something you can do. And then we'll reevaluate. Like, what you need to do, why you need to come to the classes, because you need to unlearn things. You need to figure out, why did you make those mistakes? Probably because you were too sentimental, my guess is. I mean, did you put all your eggs in one basket? Did you fall in love with the stock because it went up, but then it went down? But my advice is just get out of the market, take some time to chill. I don't know. What do you think, Rodrigo?
Well, the thing is, I get a lot of these calls, and usually I try to get as like feedback from that, because I've been in a similar situation. Obviously, not that much, but when I started trading, some days, you were up big league, and then the next day you were down big league, and there's really no such strategy. It's some people like tend to, they want to approach it as a casino, and I know that's not what the stock market is, but the psychology, the mental part of it makes it easy to fall into that trap. And that's why I do like the investment psychology class, because it does kind of kick some sense into the market, because 2020 was a crazy year, and everybody thinks it's just going to repeat itself forever. But everybody that made money in 2020 was washed up in 2021. So it's an ongoing thing. The education is ongoing, and this what everybody seems to have in common, that when they lose big amounts of money, is that they've never taken a real educational course with I guess a verified trader, investor, money manager, whatever you call it. And that's really why I'm really positive about the trading school, because I've heard from people that they're starting to make the turnaround. They're starting to really understand. It's clicking in their heads now. Everything they've been doing wrong, but if you don't know what you're doing wrong, you don't know what you're doing wrong, right?
Yeah. And here's the thing: there's no secret system. Like, I'm not going to tell you in good conscience, so like, if you come take our class, you're going to become Warren Buffett or some great trader. What I will tell you is that I will try to teach you what works for you. Now, the student that just brought up that big loss, that bothers me, because, well, a potential student, because obviously losing money sucks, right? I mean, we've all done it. I'm not going to sugarcoat it. But what I'm telling you is that there is a reason why you lost that much money. It's probably because you guessed, you didn't have a strategy, or you let your emotions take over. And now the worst thing you can do, it's almost like you're a gambler, right? And as market people, we're not gamblers. People say the stock market is a gamble. Well, maybe it is, but if you're doing it right, it's an educated guess. It's not a gamble, right? Playing a slot machine is a gamble. You're playing a computer. At the end of the day, you're always going to lose, because they'll just program the computer to destroy you. But if you are someone who bets on football games or horses or poker, it's a skill, right? You can study football teams and say, well, the last time these guys played in the mud, their defense really came out. So gambling is you're throwing the dice down. Investing is not gambling. You should have an educated guess or reason for why you're getting into something. You play the slot machines, you're going to lose eventually. Yeah, maybe you'll have some good time. You get the lights going, you get a good dinner. But someone who's a poker player, they're not just guessing. They're not there for entertainment. They can read the emotions of the people they're playing against. They can count the cards and know what's going to come out next, or have an idea what's going to come out next. So, it upsets me that someone lost that much money. Hopefully you are a person of substantial assets and that doesn't destroy you. But, we're not guessing here. The idea is to have an educated reason to get into a position. And if you have parameters and so forth, I firmly believe you're not, you'll never be in a position to blow up. Yeah, you're going to have losses, but you should never be in a position where all your eggs are in one basket that you can completely blow up. We have to go into this with a defensive mindset and not an offensive mindset.
But I noticed that it happens mostly. I mean, I know that hedge funds and firms, like, they go belly up as well sometimes, but the majority of people that end up holding the bag, like 9 out of 10, it's always retail. And I feel that there's a lot of emotional trading out there, that, and it's okay, because there really hasn't been education for retail traders, and obviously big firms profit from that. And that's kind of what we want to avoid. We know that retail has typically gotten the short end of the stick. So that's why we are trying to give you guys the best education with Mark, giving you the best tools as well, because the trading school does come with Benzinga Pro, but also the sessions. I just went over a session here while you were talking, Mark, from investment psychology, about 2 hours long, going into the psychology of trading and how to be able to control your emotions whenever you are in a trade, because it's way too often. I know, because I talk to like hundreds, I talk to thousands and thousands of traders around the world, and it's always the same thing. So that's what we're trying to help you guys with. The mistakes are the same. And if we keep doing them as retail traders, we're just going to keep blowing up our account and then, get washed out. And then the next wave of retail traders comes in, does the same mistakes, and so forth and so forth. And big money gets bigger. So we want retail traders to have the tools to be able to trade profitably within any type of market: bull market, bear market, choppy market, ape market, Fed driven market. It doesn't really matter, because there's always opportunities out there, but you need to be able to accurately find the opportunities and find good entries. And, it's not just about buying it for buying. There's a lot behind the charts that it takes to understand the market itself, all of the participants of the market. And Mark Putrino, having traded with over an account that's, bigger than $1 billion under Steve Cohen, and Steve Cohen's fund is 27 billion, and Mario Gibelli's fund today is 32 billion. He was on CNBC earlier today. So being able to see things from the other side of the coin is going to help retail traders understand the full market itself. So I definitely think that a lot of you guys are going to benefit from this, not just because of Mark's experience in Wall Street, but also because he's a CMT. He's a chartered market technician. So he's the professional chart analyst. And when it comes to finding the best entries, when it comes to finding the best exits, going short or long, that is who you want in charge of the buy and sell button. But let me take some questions here, Mark, because they're coming in pretty quick.
All right, cool.
Yeah, so I think you mentioned it. How long are the classes for, and how often do they meet? So far, I'm not at a loss, but I don't want to guess anymore. That's number one. Congratulations, Veronica. Guessing is never good. So the classes are for the full year. So whenever you sign up, you have a full year from there. And your other question is, how often do you meet? So we meet 3 times a day. We meet at 7 a.m. From 7 to 7:45, you have the lecture, okay? Then from 7:45 to 9 a.m., you have the lecture review. And then you have a break, and then you meet again at 12. So these are all Eastern times. And remember, these times are not set in stone, because if you do need to extend, because you guys have more questions, the classes are extended. I just showed you a class that went for 2 hours, which is way longer than 45 minutes. But it's because, we have Q&As in the class. We have a moderator there. And basically we make it as easy as possible for you guys to absorb the education. We're not just going through PowerPoints like, you know, those lazy teachers we all know. Mark is very passionate. And really quick, I just want to say congratulations to the newest member, Tim, Joe, and Savannah. Welcome. Welcome to the trading school, new members here of the family. But yes, Veronica, so you're going to meet 3 times a day. That does not include office hours. And you have a live chat with Mark for education, and you have a chat for trading, because Mark is whipping out trades in the chat room inside the trading school. So that answers your question, Veronica. I'm going to post the link really quick here, and I'll go here to the next questions.
I will say though, let me,
Yeah.
like Fridays, our plan is we just have our morning class. So the other days we have noon class and office hours, but we don't on Fridays unless something really big is going on. You know, if the market crashes tomorrow, we'll talk all week. That's not
Yeah, Friday is the recap. Paul, yeah, absolutely. I definitely agree with your advice there. Lenny, but it's really the information. Short term, okay, there's not a question. But yeah, I do get it. All right, I lost all the text above. I got out with 5%. Okay, what is being shown to us? So yeah, you'll get access to all of this inside the trading school. You also get access to Benzinga Pro. I'm just going to open this here because you guys keep asking about it. While the Pro loads, Lenny is asking, is it a one-time payment for the class? Yeah, so it's one payment for the year. So it is a yearly, correct, it is for the year. Now I'm showing you Benzinga Pro here. You can filter here by your keywords. One of my favorite ones is FDA approval. Okay, there you go. You are welcome. Now you're gonna get every PR that comes out here that mentions FDA approval. You got Regeneron, you got NTLA. You can find so many trade ideas with this. You know,
Rodrigo, can you show them overbought and oversold on that? We get a lot of our ideas from stocks that are really oversold.
We have a scanner for that. But I don't want to get too deep into the Pro because then I won't finish. So let's go here to the questions. Yeah, so the charts, everything that you're seeing here, that's all included. As you can see, all I gotta do here is go relative strength index, and you can go here and customize this by color, style. You know, if you want this to be maybe blue, and I'm just doing this as an example, guys. This is how I typically set mine up. Okay, so there's your RSI. Obviously, you have the daily. That's what I use for this. All right, so I'm curious, do you teach 7 a.m. to 7 p.m.? So Belul, so the classes begin at 7 a.m. Eastern, and you meet until 9 a.m. Eastern, and then you have a break, and you meet again at 12 p.m. If you need office hours, yes, you can schedule office hours with Mark. Devondra is asking, do you send alerts to buy? Yeah, so we're sending out trades in the chat room. That's pretty normal for Mark. In the sessions that you will be in the classes themselves, Mark is using real life market examples, current market examples that are actionable. Okay, so Lenny is asking, do you have homework in the classes? Mark, are you giving them homework and tests already?
Well, yeah. One of the big things we do is the interactivity. Like, for example, you know, it's not like today wasn't a formal, like, oh, on Monday, give me 20 examples. But our 8th class, which was today, is on investment strategies and trading systems. So what I ask the students to do is show me an example of a trading system you developed and explain it to me. It could be very simple, like the stock is oversold according to this indicator. Now I think it's going to rebound, or the stock is overbought according to these 2 indicators. Now I think it's going to sell off. The thing is this, right? I could sit here and lecture until I'm blue in the face. But what I want the students to do is to, you know, I'm not here to show you what I do. I'm here to teach you how to develop what you do. So, like, for instance, in today's class, I said, all right, let's see some trading models. let's look at this new indicator we've been dealing with. So the students post their charts, and we get a good learning experience out of that. So yeah, I mean, we're gonna have, like, you can print them out and write down
Okay.
what you think, but a lot of it is the interactiveness, like helping you learn how to build your systems.
Okay, and I just want to show you guys this really quick. This is the movers tool inside Benzinga Pro. As you know, the trading school includes Benzinga Pro, so you get uh, the only scanner that is open pre-market and after hours. So if you click your pre-market, it's going to show you you can look for gainers or losers or both of them, and you can also narrow down the period of this 30 minutes, 1 hour session. So I'm clicking on session and I'm doing pre-market and I'm doing gainers. And I'm also filtering the market cap that I want to trade around and the price of the stock. And if I want to narrow down even more, I can go ahead and click the sectors that I want. So I could just do energy, financials, and healthcare. It's the only scanner available pre-market that shows you this information. This is only available inside Benzinga Pro. And you have a scanner here for after hours. There's no other place that you can do this. Every other scanner is only during regular trading hours. This is during all trading hours. So this is one of the scanners that we have, but we also have a lot of other tools here, like analyst rankings, monitor here, the analyst ratings. You can filter this by your watch list. You can filter this by the sources of the news. But this is a monster of itself. Back to the trading school here. This is where you're gonna, if you click on home, okay, and just remember the trading school and Benzinga Pro are together. Okay, so Pro is included in the trading school. Veronica, yeah, it's pretty sweet, I know. No, Benzinga is not a brokerage, Alani. We just provide insanely fast news that a lot of traders and investors use. So, I mean, I definitely consider it a must. I know that when I did not use Benzinga Pro, I was all over the place. And I know a lot of you guys are going to relate and be like, oh, he's right. But I'm pretty sure a lot of you guys have like 20 tabs open trying to find data in different places. And it was just very messy, a messy process to do real research. And I found Benzinga Pro and I was able to use it profitably, and it totally changed the game because it's not just like Mark says, there's no secret sauce, but at the end of the day, there are tools that can help you. And obviously hedge funds and these big funds, they spend millions of dollars in tools and data. And the least you can do to give yourself a chance is to get yourself Benzinga Pro and the trading school. So something I see a lot of people do is that they'll go to Benzinga Pro, they'll go to their scanners, or whichever of the tools here. This is one of my favorite ones. It's a new one. So shout out to the development team there. I'm just going to close this scanner. As you can see, it's very easy on the eyes. This gives you an insight of companies that have had multiple insider buys from more than one person. So multiple insiders at one company buying shares of the stock. And this is very bullish in my opinion. So I do come here to just get tickers. This is one I got from yesterday, ETWO. Then right here, you can see stocks that insiders are buying. So this is always updated to the minute. Penny stocks that are being bought in big amounts, insider sales above 100K, and it shows you the biggest ones. It shows you the biggest ones, the ones that matter. Okay, I don't care if somebody sold $2,000 of their stock. I want to care if they bought like this $31 million, or if they bought 2.4. Like what's the size of the trade? What's the quantity of the trade? What percentage do they own already? You can see here the percentages. So you have tons and tons of tools in Pro that honestly what people do is that they go to Pro, then they come back to the chat room like I did right now, okay? And you can literally just go in there and start talking with Mark about your trade ideas. And I mean, that's how you can get really, really good value out of it. So Norm has a question. Chris makes a good point. I'm about to get into a job that will be active during your classes. How to get your classes if you are in when 8 to 5ers are working. So all of the classes are recorded, Norm. As you can see here, I'll go to the video library. And in the video library, you can look at all of the classes, the most recent ones that were uploaded with the Q&A, okay, with the Q&A. So if you have questions, you already know that this is going to be a good spot for you. If the class is not, if it's not clear, you can always come to the Q&A, which will be there, or you can schedule office hours with Mark, which is also very interesting. And you'll have the classes here, just like I'm showing you right now. October 21st, investment strategy and trading systems, market principles right here. We had this one on the 20th, Q&A always on the side. Investment psychology, this is my favorite class. I love psychology, especially when you apply it to business and trading even more. And this actually is going to help you find out who you are as a trader. It's going to help you kind of find your pace when it comes to trading, know and understanding your risk. I like the chart patterns as well, because I mean, as a CMT, Mark Putrino, it's really hard. I mean, it's impossible for Mark to give you like 20 something years of chart and analysis in a couple of hours, but he does a great job of giving you guys the best pointers that you need for that. And that's why the class is for a full year, because there's a lot of material, there's a lot of content that you need to go through. And remember that not every market is going to be the same. 2020 and 2021 are two different planets, if you ask me. Levels, trends, like you can get trade ideas from all of these classes. And it doesn't matter if you're new or if you're experienced, it never hurts to talk to somebody who's managed over $1 billion trading under legendary investors like Mario Gabelli or Steve Cohen. So everybody's going to be able to learn. It's a great environment for that. It's not like one of these pump and dump chat rooms that, like, I remember when I started, there was no trading school, and I went to these public boards, and if you ask a question about what is this, people just dog on you and like kind of push you out. And they're just, people on the internet are very weird, and they're mean behind a computer. But in Benzinga Trading School, everybody who's inside is pretty much on the same ground. We're all here to learn and make money, and it's that simple. So it's a great environment for people to feel okay asking a question if they don't know something, because not everybody knows anything, and you have to ask to know, right, Mark? Yeah. So Paul is asking, can we keep using Benzinga Pro after the year is up? So the trading school so Pro is included in the trading school. So as long as you have the trading school, Paul, you will have Benzinga Pro. Okay, I'll post the link here again for you in the Zoom. Okay, let's see, we got another question. You also teach how to navigate and to use all the features on Pro. Yeah, we have a separate session for that. So don't worry about that. We have sessions for that as well, Beilu. Kate is asking, how long is the class? The class is, well, it's 1 year. The subscription is 1 year, but the class it never ends. We're going to keep going because, that's Mark's passion, education, teaching, helping retail traders get ahead. Like I said, we have a pretty solid mission statement here at Benzinga, and it's pretty simple. We are empowering retail traders around the world, and we're doing it because we're passionate about it. We want to help you guys. We know there's a lot of confusion out there. There's a lot of misinformation out there. So it's better to hear it from the man himself, somebody who's been trading with the best. And that's really who you should be following and learning, not these Reddit, Wall Street bets, social media people there. If you're serious about making money, you can't be following, these type of traders, okay? You need to really go with the serious people that are verified on Wall Street, that actually know what they're doing. John Costello from YouTube. Yeah, I'm posting the link in the YouTube as well, so you guys can take a look at it. And I know that you guys have questions there as well. Let me go get some questions from YouTube. Nisha, I barely have 1290 invested. What can a poor man do to become a better trader? I can tell you that being able to do educated trades and understanding the markets is always going to help you. Richard Judge, Benzinga Pro is a great tool. Absolutely, man. You know it. Kevin Smoke, I cannot invest again. Ask me. Okay. John Costello. All right. You got the link there. We got another question here on the chat on Zoom. Which version of Pro? This comes with the Essential. So If you get Pro by itself is like $2,000, but if you get the trading school, it's, you know, you're saving like $800-900 plus you get the trading school. So and Devondra, the computer is complimentary. It's a Google Chromebook, so it's totally complimentary. It's not added to the price or anything. So basically, it wouldn't change anything. And
Like, let me interlude there. I mean, hopefully in this class you'll be profitable enough that you're not going to have to worry about a free computer or
yeah,
anything
yeah,
like that.
gift.
This will pay for itself many times over.
Yeah, and Rebecca, the price on the checkout is the $12.97. So that would be the price from that. And Michael is asking, okay, yeah, Mark. So I'm gonna put my information there just so you can go and call me or ask me. But let's go over some tickers, Mark. Are you ready to pull your
Yeah, I got a little
okay.
more time. I got to cut off around 7, but
Okay.
we got
All
about
right,
20
let's
minutes.
do tickers. All right, let's do tickers now. Guys, throw your tickers. You know the drill.
All right, do I need to share my screen again, Rodrigo, or
Yeah, go ahead and take over.
Okay.
Go ahead. And just so you guys know, once Mark heads out, because he has to go plan the lesson and go over some things from the trading school, I'm going to stay here and I'm going to go over any questions you guys might have on the trading school. I'll show you the platform. I'll give you a sneak peek of one of the classes as well. So we have a ticker here, Tesla. Let's go with Tesla, Mark.
all right, you can see my chart. Yeah, I mean, everyone's asking about
Yep.
Tesla because it reported today, or they reported today, or was it yesterday? But you know, here's what I see when I look at Tesla. Now, in the stock market, there's a common expression: markets have memories. What does that mean? That means that a stock or a level that was important a while ago could become important again. So our second lesson is levels, which levels are important. So Tesla has reached an important level. I'm going to put this line in here, this horizontal line, at the 893 level. So let's look back into January. That's right where Tesla hit the resistance. Stock rallied. Once we got up to 890, the sellers took over and drove it lower. So now Tesla is at that same level again. So it doesn't surprise me that it stalled out or hit this level, or stalled it out this level because it was resistance. Why does this happen? Well, you know, maybe people that sold back here at 893, they just said, all right, well, I'm going to be stubborn and wait till the stock gets back here again. Maybe people that looked at the chart saw 893 was a good level. So this is right where we ran into resistance today. So now a lot of students are asking about this because Tesla's a popular stock. They want to know, should I buy, should I sell, or should I hold? The way I would look at Tesla is this. When a stock gets to an important level, it's pretty rare that they trade sideways or consolidate. It's almost like you're hiking in the woods and you come to a crossroads in the path. You either go to the right or you go to the left. Odds aren't that great that you're going to stay right where you are. Now, when stocks get to important levels like this, there's a good chance this resistance either breaks and we make a big move up or a quick move up, or it fails and we make a rapid move lower. For our students who trade options, a lot of them we're talking about, this would be a good place to put on what we call a straddle or a combination or combo. You buy a call and a put, knowing full well one of them is going to lose money, but you're going into it with the thought that the one that makes money is going to make more than your losses. So if the stock breaks higher, you're going to make money on the call, lose money on the put, and vice versa. So like Tesla has gone to a point where it's going to move one way or the other. Now, some people out there might say like, oh, well, you know, you're saying like, oh, it's going to go up or it's going to go down. All right, well, yeah, I am saying it's going to go up or going to go down. Sometimes when stocks are in ranges, they trade sideways for a while, but when they get to a crucial crossroads or fork in the road, so to speak. We're looking for a big move higher or a big move lower, which is rapid. So a lot of the students in the trading school class that trade options were putting on straddles or combos here. So that's Tesla. So let me go through what I typically look through in the markets in the morning.
Yeah,
because
and we got a couple more after, just so we can get to the other tickers, Mark.
All right, well, let me know. Let me know what ticker we should look at, and then I'll do a brief rundown of going through the markets.
Yeah, so let's just try to do them rapid style, okay?
Very cool.
So what is the final judgment call on Tesla?
Tesla looks to me like it's about to make a big move. Is it up? Is it down? I don't know. It's going to break one way or the other. This would be a good strategy or a good opportunity for an options trader to put on what we call a straddle or a combination.
Okay. All right. Let's go to FSLR from Anthony.
Right. FSLR, First Solar. All right. So I don't think we're going to have a rapid and quick move here. So I wouldn't recommend an option strategy like I just did on Tesla, but there's some important lessons to be learned here. Remember, we talked about the importance of levels. You don't need to be a guru to see that 70 was an important support level for the stock. Now, you don't need to be a guru to see that. By the way, I love the term guru or ninja trader. You guys call me whatever you want, guru or ninja trader. Clearly, I'm being sarcastic, but if you're going to be in my classes, you got to understand my dry sense of humor. So now let's look at the 107 level. Again, this is an example of certain levels are more important than others. For some reason, the 107 level is important here. It's not 106, it's not 105, it's not 108. Why is 107 important? I have no idea. There's no logical reason for it. Sometimes you have a logical reason. If something gets to 100 or 20, it's just a nice round level. But we can see there was a lot of resistance or sellers came out around 107 back in January. The sellers put a ceiling on it in September, right around the 107 level. So now, once again, we're up here testing or trading near this 107 level. So how would we look at this? Well, we're at an important crossroads. What happened the last time First Solar got here? Didn't break through, sold off. Didn't break through, sold off. So now here, if it breaks through, we're going to look to see if this level becomes support. But if it doesn't break through, we're going to have another downtrend. So I would say you got to watch this for maybe another 2 or 3 days or maybe a week. See how this stock handles the 107 level. How will you know if it's going to go higher? Well, we look for the conversion process. Remember we spoke about remorse, buyer's remorse, seller's remorse. So there are people that sold it here that regret doing so because it went lower. There are people that sold it here that regret doing so because it went lower. There are people that regret doing so now because it went lower. So now let's say the stock gets higher, okay, and it breaks this level. This is what we need to see. Does this level that was resistance turn into support? Are there enough remorseful sellers that decide they want to buy the stock back after it goes higher, that they're going to be placing their buy orders, and this what was resistance could become support? So again, we have a stock that's at a crucial crossroads, for instance, just like Tesla. And I always get asked questions about this because when things get to crucial levels, that's when students get interested. So, same kind of a deal here. Let's see if it breaks through. If it does, we'll see if this 107 level turns into support. that'll set the base for a new move higher. If we can't get above this 107 level over the next 2 days, my guess is we have another downtrend like we did here or back here.
Okay. All right. Let's go over DWAC. This is Donald Trump's SPAC deal that was announced today. I think it's up like 400% or something like that.
Dude, I don't even know what to say. I don't even know what to say about DWAC. But I will tell you this. A lot of our students made a lot of money on this thing today. Just look in the chat. I don't know, Rodrigo, if you could even post that, but a lot of our students made a lot of money on this thing today. They were just day trading it. I'm not exactly sure what they did, but a lot of them were looking. This is a 1-day chart, this is something like a day trader would look at. So the charts I showed before are like months or weeks. This is just today. Okay. So this is DWAC, Digital World Acquisition, just today. So 1-day chart. So how a lot of our students made money, Rodrigo, was they traded this range here. Okay. This is how short-term traders make money. They trade ranges. So what I'm going to show you here is a trading range. So this is something like I had never even heard of this company or this SPAC before. But today, a lot of the students were asking about it. I looked into it. And this is one of the things that I like about the class. We look at stuff in real time. I mean, I could show you, oh, here's a trading range in XYZ from, last April. Well, of course, it's going to be perfect because I wouldn't show it to you if it wasn't perfect. But Rodrigo, this is what some of our students were doing today. And they made some money, and it's even in the chat. If you want to show it or share it, I don't know if we can or not. But basically, we see from 1 o'clock to the close, there was the top around 49, and there was the bottom around 41. So the stock got up to around 49, they sold or shorted it. Got back to 40, they bought it or covered. Got back to 49, they sold it or shorted it. Got back to 40, they covered it. So this is an example of how what we do can show, retail, like day traders, how to get in and out. All these charts are fractal in nature. This could be a 5-year chart for a weekly trader, could be taking positions every week or now and then, or it could be, like we see here, a short-term chart for a day trader. So when you have a range like this that's well-defined, that's when traders are like, man, there's an opportunity there. Like, remember when I said before, if something is in equilibrium, there's really no opportunities. But if something is out of its equilibrium, there's opportunities. Like here, for whatever reason, you could argue this line here approximately was equilibrium. Let's call it 44.70. So if the stock stayed at equilibrium all day, you're not really going to be able to make any money. We want moves. So when it got above equilibrium, we sold. Below equilibrium, we bought. Above, we sold. Below, we bought. Above, we sold. Below, we bought. So that's DWAC. We had some students make some nice profits on this today.
Okay, Mark, and you got time? How are you doing with time, Mark?
Well, dude, it's like 6:53. I don't know. I got 7 or 10 more minutes. What if students have good questions? We'll stick around.
Okay, all right. Let's take a look at Neo. Look at Neo. I know you love Neo, Mark. It's your favorite stock. No.
I don't have a favorite stock. Well,
What is your favorite stock? What is it? What is your favorite? You need to have one like that. Do
I have a favorite stock?
DWAC?
No, I don't actually. I don't know.
No?
That's a really good question. Probably my favorite stock is one I can print out and frame that has the coolest picture. Like the Disney ones are cool, but not having a favorite stock is actually a good thing, because we don't want to be emotionally attached to a stock. You can have a favorite stock and you can learn the ins and outs and trade it up and trade it down. So there's nothing wrong with having a favorite stock. But my favorite stock is the one I just made money on. so
I love it. I love it.
I'm not married to an idea.
No, but you're right. Like I was in love with Snapchat when it was like $20, and man, that thing went down like 30% after hours. So, that's like the part where you talk about, in the investment psychology where, like stocks will move like, but I'm not trading it. That is something that's kind of like long-term portfolio, but it does kind of put you in that situation where, like I like the stock. I know it has a good future, but hey, bad earnings can beat any stock down, right? So
yeah, that's one of the problems that investors have is sentimentality. And we talk about this in our investment psychology lesson a lot. Traders or investors may fall in love with a stock. For example, and this actually happens a lot if a stock is up. Like someone might buy a stock at 20, it's XYZ. It goes to 30, goes to 40, goes to 50, goes to 60. And this investor's like, man, I love XYZ. This is the greatest stock ever. Well, then it starts going down. And instead of using logic and having a disciplined approach to sell it, this sentimentality comes in, or what we call a sunk cost bias. It's like, I put so much effort into the stock. I love this thing. Yeah, it's unfortunate, but it's very similar to like dating, right? I mean, I've been married for, Jesus, I don't even know, 19 years. Don't let my wife hear that. But it's like when you're dating, right? You date someone and your first 2 months, everything is great, you're in love, blah, 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 blah. But then 3 or 4 months into it, it becomes apparent that you're dating the wrong person and they're not the right one for you. But you cling to this like notion that like this was the person that's going to make me happy. You get sentimentality. You get emotionally bound to something. You get a sunk cost bias. So let's not forget, as we're looking at this, we are looking at these stocks as tools to make money, nothing else. Look at the stock as a tool to make money for you. And this is where we go back to the it's not about being right, it's about making money, which is something we talk about a lot in the investment psychology lesson. So the good traders are the ones that can disassociate themselves. All right, XYZ made you a ton of money. XYZ is going down. All right, it's over. We're going to move on. We're going to give that person we dated the old, the pink slip, or put them on a bus, send them out of town, and let's move on. Now, this is seems to be self-evident and it seems to be logical, but this is emotions. And this is why, as traders, emotions like destroy people because they get too sentimental, they get attached to an idea. We need to learn how to disassociate ourselves. We're going to put our money to where what's going on is happening. ABC might have worked out because we thought, all right, well, we bought it at support, it got to resistance, time to sell. Doesn't mean you need to take ABC off your radar screen. Maybe if ABC breaks that resistance, it's time to go back in. If ABC looks like it's going to roll over and go down, maybe you can short it. I know what I'm saying sounds easy, but it's really hard to put into place emotionally. But this is where we go back to our investor psychology. Look at these stocks not as people you're dating. Look at these stocks as a tool to make money for you and your family. Don't have an emotional attachment to a stock, because if you do, the odds are you're not going to do well. So Rodrigo told me one of our students just asked about NEO. And this is a good example of something we've been following. So remember we talked about our RSI indicator, just a simple momentum indicator. If the RSI indicator, this blue line, gets below a red line, it shows it's oversold. That means there's a chance that the buyers are going to come in and it's going to revert to the mean. Remember, we are looking for reversions or breakouts. So we got oversold. It's time to buy. Stock rallied. Here we got overbought. Stock sold off. It was time to sell. So this is a very simple, easy system here. Just a one indicator. This is a one trick pony. This is the RSI indicator, which is available on any software, Benzinga Pro. If it gets above this line, it's a sell. If it gets below this line, it's a buy. And you can see this has been a very accurate model over the last few months. So NEO is a very tradable stock, for my opinion. No, I can't find. Oh, here it is. It's not there. So, do I like NEO? Do I not like NEO? You know, it's irrelevant. Do I like NEO to make money? Do I like NEO? Do I look at NEO as, you know, am I going to date NEO and have, you know, are NEO and I going to go for walks in the park and hold hands? All right, I digress. But no, we don't want to go for walks with our stocks and hold hands and read love poetry too. If I'm looking at NEO, I'm looking at probably this level around here. We're going to call this 40. See, now we were support here, resistance here, testing resistance. If I was going to go along NEO, I would wait until it broke this 40 resistance, probably buy it like around 41. So that's what I see on NEO. We got a potential short-term breakout here.
Okay, and just to recap here, every ticker that we're going over, including DWAC, okay, every ticker, we're setting a watch list for the trading school. Mark is going to be following up with all of these trades like we always do in today's amazing trading school workshop. So Mark, I know that you're a little bit tight with time, so if such, or if you want to stay, it's fine, but I know you're busy, you tell me.
Actually, dude, I got to sign off. I got some family obligations to take care of, you know.
Sounds, yeah, yeah.
Kids.
All right, so let's do this, Mark.
Job.
Just let the students know here and all the prospect students why they should join your class and what you're looking forward to this week and next week going on in the markets.
Well, I mean, I would say you should join my class because I think it's good, right? Of course, I'm biased because it's me. I think, Rodrigo, isn't there like some kind of money back guarantee? So people like really don't have risk. But I will say this.
There's a 7-day money back guarantee on it.
Yeah, all right. Well, that's fine. But my guess is the students that get into the class, they like it. But here's the thing. This is what it comes down to. If you're looking for someone to tell you what to do, this class is not for you. If you're looking for someone who will teach you how to build your own systems and models that fit your personality, I think this is a great class and you should give it a chance. And we're not, you know, I'm not here to just continuously throw ideas at you. Buy this, sell that. What I'm here to do is to teach you how to develop an idea that might work for you. All right, we're going to sell this. It's overbought. It's at resistance. We're going to buy this because it broke an important support level, a resistance level, blah, 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 blah. So this class is not about, you know, me feeding you fish. This class is about me teaching you how to fish. And we're not just looking back at perfect examples like in a textbook. We're going to apply it to the real-time markets like we do now. Like, for example, I'm just going to bring up this Verizon. A lot of the students were able to make money off of this Verizon. I didn't get into myself because frankly, I'm just, so busy with the teaching that I don't want to be invested now, because I want to be able to focus on teaching. And I've been doing this long enough that I know there's always going to be other opportunities. So I don't have a fear of missing out. But this is not, let's look at this horizon. This is not in a textbook in a year from now. Like, all right, it's 2022. I just released a textbook. Hey, I told you guys everything was great. You could have made a fortune in Verizon. This is real time, right? Like, we saw this big sell-off in Verizon that gave us an alert or whatever, a wake-up call. We went long, we made money. So I think maybe you've seen other classes out there that are the same, but I haven't. But Rodrigo, I think what we need to, the students need to understand is this real-time application is really what is, the best thing or a great thing about this class, because in hindsight, everyone is a genius. Everyone has 2020. By looking this stuff in real-time applications, like we made money here, I think the students are going to really understand. And I think that's what makes this different.
All right. Well, thank you for your time, Mark. Thanks for joining us here. I'm going to stay here answering some questions for the chat. But in the meantime, I'll share here my screen here so that I can just take over the screen share, Mark. And definitely appreciate your time here and everything and helping out with the trading school. Everybody.
Oh, dude, it's my pleasure. I mean, I like teaching. I mean, I'm really into it. I at this point in my career, I enjoy teaching people. What really upsets me is, like, if I'm like, I see some advertisement like, oh, you sign up here, we're ninja traders or gurus, we're going to guarantee you your money. That bothers me. So that's kind of giving me my call and my drive to teach what happens in the real trading world. So I appreciate everyone checking in. Hopefully you sign up, and that's it. Thanks, Rodrigo. I'll be back tomorrow morning at 7:00 for our Friday morning class.
Absolutely. I'll see you there too. I always tune into the classes. Thanks a lot, Mark. And I'll be going over here a couple of questions for you guys. So Kate is asking, is there live trading? Kate's asking if there's live trading.
Well, there is. I mean, we talk about trading in real time, like going back to this Verizon. We started watching it, I don't know, maybe last Monday or Tuesday. And then we pulled the trigger on the 13th, which, what was that, last Wednesday or last Tuesday? So yeah, like, I'm not barking out like, oh, buy this, sell that. But with the students and me, we looked at this thing together and we came up with an idea that it was time to buy. And we did. So is there real-time trading ideas? Yeah. Do I guarantee a trading idea every day? No. It depends on the market. We let the market tell us what to do. If nothing's going on in the market, what do? We take the day off, we read a book, we go to the beach, we go for a hike. If the market, like in Verizon, is telling us there's something to do here, well, we have a huge sell-off for no reason, there's a good chance it's going to rebound, we jump in. So, I'm not going to say like I have a guaranteed daily trade idea. Some days there are going to be no ideas if the market's not moving. Some days, if the market is melting down or, going higher, there might be 10 or 20 ideas. The thing about this class is this, right? We don't guess. We have to have the discipline to not guess. We have to have the discipline to stay on the sidelines and wait for the market to tell us what to do. And when the market tells us what to do and we're not guessing, that's when we can make money. So we might go a week or two with no trade ideas. We could have a blow up in a sector, and all of a sudden we have 5 trade ideas. So I think that's one of the good things about our class, is that we're not guessing. we're not telling the market what to do. We're letting the market tell us what to do. All right, I hope I'm not
Okay.
digressing, Rodrigo, but
No, that's fine. I appreciate your time here, Mark, and everything. Appreciate everything you're doing here.
all right, everyone, I'm going to sign off, but I'll be back for the 7 o'clock class tomorrow. Thanks, everyone, for tuning in. Thanks, Rodrigo. I'll talk to you all
All
tomorrow.
right, Mark. I'll see you tomorrow. All right, Mark.
Okay, cool. Thanks, man.
All right. So, guys, as you can see here, what I'm showing you, well, let me answer some questions here before. I got DWalk on my Pro. I put the 1 minute there. As you can see, this is live right now in aftermarket. Pretty wild. So I'm going to go over here a couple questions you guys have. So if we join, Veronica's asking, if we join, do we pick up where you are now? Yeah, so basically you pick up where you would join the class, which is live. And then as you join the class, you're going to be attending the live classes. And if you missed any classes, you're starting today, then basically you are going to be able to look at all the recordings that were for all of the prior classes so that you can build on all of those chapters, right? So you have 8 different chapters and you'll go over each and every one of them in detail. And you have Q&As for all of the chapters, all the lectures. So, that's very helpful. I know in college, if you missed class, you were absent and that was the end of it. But we wanted to give you guys, a little bit of help. So that's why we have those office hours and the chat room with Mark for trading and education. And then we have another question here, Kate, live trading classes. Yeah, every day. That's pretty much the standard from what you see there. Let's see how much is, okay. I put the link there in the bottom, Sammy. This is available till midnight. So it's definitely gonna, the price will jack up, but in the meantime, you do have that discount available that I put there. And for those that are asking, yes, the trading school comes with Benzinga Pro. So what I'm using here, you can see my RSI. I did, colored it up there a bit for me. And this is the 1 minute chart. Probably the only one we could see, because there's no daily or anything. This is the 5 minute chart. Obviously, this is real time. This is happening right now. We're witnessing something here in the market. So let's see other questions. After having a couple of teaching platforms. Okay, yeah, I think Mark went over that. But basically, Benzinga is pretty much made for retail. We've been around for over 12 years. And the goal of Benzinga as a company is really to help retail traders and be able to leverage data in their power. The data is what most people base their trades from. And if you look at it, big firms have all the data, they have all the tools, they spend millions and tens of millions in data and and tools that help them. So as a retail trader, like 90% of retail traders get wiped out. So you want to give yourself a chance and have some tools that are going to help you and give you leverage, right? This thing that you're looking in the chart, on top of the chart, that it says, why is it moving? That's actually a person. We have a full department of people going over the market, scanning the news. We have hundreds of writers and editors. We have about 10 million visitors on our website. So people count on us for financial news. And this is a little something extra that we do here. So if the stock is moving and you don't know why, this is basically answering your question, why is it moving? And it's pretty cool because you can actually, you can create a news feed like I'm doing now. And I go to categories, I click on when, why, I am. And these are all the stocks that we've picked out throughout the day, going up or down, and why they're moving. So this is one of the things you can categorize it, right? When. The other ones that I do is, let's find it here. Okay, Benzinga exclusives. So this is basically when a company comes to Benzinga and they do a PR, and we do the PR. So BBIG, we've done several for them. I'll show you where's that chart? I have different workspaces here for different things. So BBIG, we did the PR on that one. Oh, wait, BBIG. Okay. I pull up the chart and I'll show you when we made that PR. So you can see it was a while back ago. So we did a PR like when this was like literally in the $2 range in this area. So from there, it went all the way to 12. One of my favorite ones that I cannot leave out is Alf. They do like ads, that kind of stuff on Ubers and these kind of like tablets. So we did a PR around here in the $3 range or so, and this went all the way up to 24 bucks. All you had to do is have Benzinga Pro and get the data, get the tools. The other one we did, AEHR. This one has been a massive runner from $2 to 21. It is still going higher. And what I do is I just click overview really quick if I like the chart and I want to know what they do. And then you'll see here, there's a description that it says they're engaged in test systems for burning in and testing logic, optical memory, integrated. So it gives you like a brief idea. And also you can just click on this and you'll end up in their webpage. So they're in the semiconductor industry. And it's pretty easy to do research here and go to their investor presentation, investor conferences, newsrooms, all this stuff, investor relations, official SEC. I mean, this is their website, right? So, but Pro basically will take you there and you can go over your charts. And this is all included, guys, with the trading school. So as you learn and you find good trade ideas here, you'll be able to actually profit from that, right? And be able to use it for your advantage. So let's go over a couple questions here. Let's see, how long does it take to get the laptop? So we send the laptop 7 days after you sign up. So if you want us to delay it, that's fine. We can arrange something. Sherry, just let us know, and we'll take care of that. So no problem with that. Just let us know when you want us to send it over. All right. Veronica is asking, will we do any basics since he's into the course? Yeah, I mean, you'll do everything with him. He's teaching the class, so basically you have him there all day. And you can ask him any question about anything that you want to sort out. So yeah, anything, all the basics from basics to intermediate to a little bit more advanced. It just depends what your level is. So if you're just starting out, it's great, it's perfect. Yep. Yeah, so Paul, this chart I have here is TradingView inside Benzinga Pro. I'm showing you the DWAG chart. This is TradingView, and I did put in the RSI there. This is really all what I need. I don't need anything more than this. I don't need a bunch of lines that anybody can say, oh, it tested it and this and that. Price action, volume, and the RSI is really what I mean, the money managers that I know and people at equity firms and hedge funds, this is really all they get by with. So it works for me as well. Let's see. And if you teach live for new traders, yeah, Belu, so everything will be live. All of the classes are live. And any questions that you have, the instructor is there basically, right? So there's no worry about that. All right. Yeah, I think we sent one to Bangkok, but yeah, I mean, we shouldn't have a problem with that. So yeah, it shouldn't be a problem, Paul. No worries about that. And does anybody else here have any questions about the trading school? Just because I do have to get back to a couple people here that have emailed me. They want to join. It looks like we have a lot of people that did pretty well on DWAC and just want to join for the education. So that's great. That's great. Absolutely. I'll post the link here one more time, guys, and then I'll be closing the stream here. Norm, right now we have the special, the 70% off. Yeah, Norm, just reach out. You can email me and we can talk further. All right, guys. So I'm gonna cut the stream here now. I have a couple things I need to get to. If you have any questions, you can always call me or email me. I'm putting that information in the chat. And what you are seeing right now is Benzinga Pro, and that is included in the trading school, which is what I'm showing you guys right now. These are the classes that we've had. You can see all the recordings there. In the video library. So these are all the live sessions that Mark does every day. So yeah, Belu, I think I answered your question. Basically, Benzinga is for retail. We've been doing everything for retail. Everything that we have here is for retail. Benzinga Pro, the trading school. Obviously, it's trading school for retail, not for hedge funds. And we do have a money back guarantee that a lot of places don't have, but we're pretty confident that this is going to help you. Paul is asking, can you keep going to the classes all year around once? Yeah, you can go over them anytime. It's up to you. There's no one's gonna do anything. It's really for you to go at your pace. And obviously, once we get to the next, let's say 1 year from today, and the classes are ongoing, so we're going to be doing the market classes, the trading school with the current market. So all the classes will be updated basically, because we're not trying to do this as a pre-recorded thing. We want it to be live every single time so that we can answer your specific questions for all the members at that point. So yeah, I'll post this information here one time, guys, and feel free to call if you have questions. That was Mark Putrino today. What you're seeing is the trading school. It comes with Benzinga Pro. The deal expires at midnight. So anything else that you guys need, just let us know. The contact is in the chat. Thanks for joining, guys. And I hope you guys have a great day, and happy trading, guys. Thanks for joining today.